Hey gang, it's Greg. No Matt today, so we are going to get kicked off with just me here in about 10 minutes or so. So hang on tight. I am prepping and getting ready, and we'll go live right at 11. All right, 4-minute warning, and we're gonna get started here, you guys. Again, if you're just joining us, I'm flying solo today. No Matt, he's out of town. So I will get kicking things off for you in just a few moments. Hey there, everybody. Welcome to Top Trades Live. We're gonna get kicked off in just a minute here. Couple of quick housekeeping items. First of all, as you can see, I'm flying solo today. No Matt Inslee. Fundamental Matt is out of town. And so it's just me and you today and your questions. That's another thing really quick. I got to multitask. I got to play host and chart guy during today's session. So I'm going to have your questions fed to me through a moderator. So there might be a little bit of a delay as we go into some of the charts or some of the questions you may have about charts. I'm going to do my best to try to circle back and to hit up everybody's questions as they come in as timely as I possibly can. But we have a full day today. There's a ton going on in the markets, especially since we last talked. Last week feels like a year ago because so much has been happening in the markets. I just have a quick list I want to run down first as the clock strikes 11 here, just to tell you what we're going to be talking about today. First of all, we got to follow up on those meme stocks from last week and figure out what went on with those names. We want to talk about the tech leaders new tech leadership is old tech leadership. We got the semiconductors that are back in action. NVIDIA's earnings are hitting the street on Wednesday after the close. That's tomorrow afternoon. I don't think I have to tell you that that's probably going to be the biggest market-related event of the week, at least the biggest event that's actually on the schedule. I think there's going to be a lot of eyeballs on this, and obviously expectations for NVIDIA are sky high. Everybody wants to know, can they surprise enough to the upside to keep this incredible rally going that's dominated the market so far this year? So we're going to get into that and get into some semiconductor charts because I think there's a lot brewing there. We got to talk about crypto. Crypto popped last night, started moving higher out of these consolidation zones. Bitcoin is quickly getting back toward its all-time highs. Ethereum is snapping back, rallied almost 20% yesterday. We want to look into all those charts right there and see where they might be going. Maybe the crypto miners are waking back up and are going to go on a run. I think that's worth watching too from a momentum standpoint. Then we have metals. Everything from silver to copper is popping and moving higher. Gold is steadily pushing new highs almost every single day now. I have uranium on my list. I have China, and then we can get into some of your specific chart requests if we have time. But as you can see, there's just a lot going on out there. The market is back in action, and it feels like the bulls are back in control. I don't think you have to necessarily be a technician or a chartist to understand that we are screaming higher here, and sell in May and go away certainly hasn't been the case. You can see this is just a quick chart of the S&P before we dive into some of those meme stocks that we talked about last week. April, corrective action almost the entire month right there. We had a month-long pullback in the large caps. We bottomed out right there on May 1st. Sell in May and go away. No, buy in May and stay. It doesn't really have as good of a cadence to it. But that's exactly what happened right there. May 1st, nice swing low right there. We've been pushing higher ever since. Not a lot of downside action at all across the market lately. Yes, we've had a couple of red days here and there, but the S&P, the NASDAQ have not shown a lot of downside. We have some new milestones in the market with the Dow closing above 40,000 for the first time on Friday. So the froth is back. Folks are excited. The bulls are back in town. They're buying stuff. They're paying higher prices. And it looks like we're just rolling into the summer. And we want to take full advantage of that as traders, obviously. No matter how you felt about the market back in April, when stocks were correcting, when there was a lot of sharp pullbacks, especially here toward the middle of the month, all of that's gone now, erased by this upside momentum. And now we're pushing toward new all-time highs. New highs are bullish. Buy low, sell high. It doesn't really work like that. Buy high, sell higher. That's how you want to think about this sort of action right here, unless we see some sort of dramatic reversal to the downside that would indicate that this is some sort of a false breakout right here, which doesn't look like it right now, obviously. Then we have to give the bulls the benefit of the doubt here. The not so bullish stuff that I'm seeing is actually happening down the cap scale, down in meme land. We talked about what looked to be an explosive rise of the meme stocks, the zombie meme stocks back from the dead last week, with GME, with Roaring Kitty, and all of that nonsense that's happening on some of those message boards. But you can see how that's resolved so far last week and this week. This was the big push Monday and Tuesday off of the weekend. You remember that Sunday night before last week began, there were all the social media posts about GameStop. Roaring Kitty, who was the message board trader who really first started this whole meme stock craze back in late 2020, early 2021. He was back posting kind of, it wasn't necessarily like information, but he was posting memes again, and he hadn't posted in 3 years. People took that to mean that like the squeeze was back on, and they did. They squeezed GameStop for 2 straight days, but you can see here we have a bit of an Eiffel Tower forming right here. After Tuesday's action right here, it topped out around 64 bucks, closed lower on the day, then gapped lower on Wednesday, ended up gapping lower on Thursday, down 30% on the day, and by Friday, down another 20%. We're right now here back in kind of no man's land. Really difficult to say what's going to happen here next, but to me, it feels like this was an echo boom, and we talked a little bit about how that could be the case last week when we first started talking about, is this the real deal? Are these meme stocks really going to get moving again? I discussed the possibility with Matt that this might be another one of those echo booms where people get excited about these old names again, but they don't have the buying power. They don't have the squeeze power to push them higher. One of the things that really surprised me about last week's resurgence of these meme stocks was the fact that it was the same old names. It wasn't new stocks for the most part that were involved in these squeezes. It was GME, it was AMD, it was the usual suspects here. And you can see AMD, the chart, or not AMD, sorry, AMC. You can see AMC, this chart really not as impressive as GameStop. Yes, it did pop 78% and then 31% following up on that on Tuesday, but right back down the other side. It's above its lows from the 10th, but at the same time, I really don't know if this is going to have a lot of staying power. It feels like the GameStop news, because it was all over CNBC the Monday morning when I walked into the office. There, we have a big TV out front that's on mute, and everybody on CNBC was talking about it. It's just sort of disappeared. It's gone up like a puff of smoke. It's very odd how it was such a big news item last week, and it's totally been wiped from the airwaves right now. So we'll see if it has the kind of staying power that it did. I don't think it looks at all like 2020, 2021, because those are some very extended rallies that lasted weeks. They could pivot here and push higher, but I don't know if the risk reward is really there anymore. I don't know if it's going to be able to drum up the same excitement that we saw back during the COVID trading times, back during that trading bubble right there. I just don't know if it has the power over people's imagination anymore. Like I said, it's the same old names again. And we know this because usual suspects like Plug popped up, and you can see this is even less dramatic. The more you go down kind of the road of like what were the secondary meme stocks back in the day, back in early 2021, these were kind of the also rans that tried to move along with AMC and GME. Plug was one of them, and you can see it flamed out almost immediately. Yes, it opened up closer to $5 on that Tuesday there, but it closed much lower. It closed in the low threes, and then it's been just slowly letting the air out ever since and filling this gap. I've said for a while, this used to be a great trading stock, and now you can see the more we zoom out, the more it looks like it's on the long road to zero right there. I don't really want to dig into Plug financials, obviously, but you can see how this is really starting to feel like an echo boom, like it's not going to really have many legs. Ran into sellers pretty hard right there at those pivot highs from back in February. I just don't see how they're going to be able to keep this thing going like they did, back during the bubble time. So I'm going to leave it at that. If you do insist on trying to trade stocks like this, I think that very small position sizing, choosing your spots, and not playing these all-in games that I see happening on the Wall Street Bets message boards and stuff like that, where these kids are they're throwing 50, 60, 70% of their portfolio into these meme stocks, then wondering why they're going broke. I mean, that's probably the reason. So, I'm avoiding them for now. I'm more than willing to play stuff like this if I see some sort of opportunity open up. It's just that in the current climate with everything else that's going on, I feel like we have much better risk reward opportunities looking at uranium, looking at the metals, the miners, the semiconductors, looking at crypto. There's all kinds of other stuff moving. We don't have to resort to playing these meme moves that are kind of dependent upon the whims of social media. So that's where I'm going to leave that one. More importantly, I think we need to talk about just how resilient the market has been pushing back to these new highs, and how the old leaders are the new leaders once again. We've beaten this into the ground. Semiconductors, we all know how when we were talking about semiconductors in April, it looked like the wind was completely out of the sails. They had a huge run up, and this is SMH. This is the semiconductor ETF right here. So this isn't an individual stock, but you can see very clear breakout happening during the melt up rally into the holidays, right before the new year, right there. And then this thing just kept on running. It looked like we had some bearish action up here and looked very toppy with these bearish engulfing candles right here, these big red candles coming after these big run-ups right here. And it looked like it was just slowly running out of steam. And then in mid to late April, the bottom fell out of this thing. And when I saw these three big candles pushing lower right here, I thought to myself, and I probably said to you guys, because I know we've discussed this, I said, okay, I think we're done for a while. I think the semis, they might need a few months. They might need to chop sideways. They might need to give back some more and move lower. It felt like that was it for now. And we could go back and take a look at these trades after they found themselves bouncing at really solid support levels and we saw the market firming back up. That would probably be the time to try to get back into trades like that. Because after these big, strong moves, a stock usually needs to move sideways for a while, at least sideways, usually giving some of that move back. It needs to keep people honest. The market can't move straight up in a straight line forever. Well, this group is so strong, and this story is so strong with semiconductors this year because it seems like every single market story is coming back to semiconductors. This seems to be all that it needed for now. That's crazy to me, but that's fine. That's the reality that we're in. Again, we can't trade on whatever our bias happens to be. I feel like they could have used some more sideways action. The market has disagreed with me, and they've pushed higher right here. And you can see now, after the action we've had over the past couple of weeks, we're right back here, matched up to those early March highs right there. And it's a down day for semis right now. You guys who are in the chat with me this morning know I talked about that NVIDIA headline that hit just before the bell about how Amazon has canceled their order for a bunch of NVIDIA chips, waiting for the new generation to drop, I guess was the headline. And that did ding up the semiconductor sector just before the opening bell. But I mean, really, it's down less than 0.5% right here after this huge run, and it's consolidating really tightly here up near those highs. It feels like it's just a matter of time before this consolidation finishes and we get another push higher to, I'd say the 240s and beyond. I don't know how long it's going to take right here, but as you can see, even on days when we're lower, it's not really a material move lower. It's not really damaging this chart at all. This is telling the story, these big moves higher. And if we look at NVIDIA, I mean, you can see here, very similar look. Obviously, it looked like it needed more time. Big 10% down day back in April, but that was enough shaking of the branches right there. I'm sure that got some people to take profits who had been riding this near perfect uptrend since the start of the year right there. But we're right back at it. We're right back at those highs right there. And it feels like, again, consolidation is very tight right there. It feels like this is going to want $1,000 now after all of this. And, if we just disregard this move lower right here, I think it's fair to say that we've been in a giant consolidation since early March. So maybe this is the time it actually needed. And again, just kind of playing devil's advocate with whatever my biases happen to be and however I was thinking about this play going into this, because right now it certainly feels like we just need a little bit more time here in the low 900s before this blasts off again. The one big thing we have to look out for, obviously, in this situation right here is going to be earnings. And earnings are coming Wednesday afternoon, tomorrow afternoon, after the bell. I mean, expectations are enormous on NVIDIA and frankly on the entire semiconductor sector. I think they're going to need to do more than just beat. They're going to need to beat big and reiterate some pretty impressive guidance in order to get folks super excited and wanting to bid this thing higher from here. I'm not saying that's not possible, but I think that's what's going to need to happen. And I don't think that's a crazy thing to say. I have a feeling that this stock will be down Thursday morning significantly, 5-6%, even more, if they just report in line and don't really give any type of like super bullish growth updates. That's not what people want. People want to see NVIDIA maintain its spot as a world beater heading into these earnings. And obviously, I don't know what they're going to report. Nobody does. But their reaction to that is going to say a lot. I've been, believe it or not, I've been absorbing some fundamental information regarding NVIDIA that seems really compelling as far as its valuation and its growth prospects, heading into the back half of this year. It's impressive stuff. However, you know how the market is. The market is, what have you done for me lately? And if it can't produce tomorrow night and really show explosive numbers, then I think people are going to walk away, and maybe it's going to need more time in this choppy zone before it really takes out 1,000 and moves higher. So that's how I'm approaching these earnings right here. Those of you who are with me at the trading desk know that we have what's shaping up to be a very quick, nice upside trade on AMD, a snapback trade here. And our discussion with this was AMD had a nice run into March, but had what we thought was an overblown sell-off here, and was finding good support at 150 and bouncing, and looked like a good snapback candidate, and it certainly has been. This is the first red day that we've experienced since we've been involved in this trade, and it's only down 1%. And this is a pretty big move right here. I mean, we're talking about a bounce from 150 and then some nice steady gaps higher here, all the way up into teasing the mid 160s here. I think that this could continue very easily. And again, you have to look at this massive drop. AMD flamed out after trying to break above 220 and sunk all the way down to 150 in a matter of a couple months. So there's plenty of good fundamental news about AMD. In fact, there's been a lot of research that's come out recently and a lot of very, very bullish analyst comments about that. I don't pay too close attention to those things, but it's interesting to see how the narrative is shifting more in AMD's favor. I've always kind of discussed it as an also-ran with NVIDIA, but there are some very smart folks who are analysts in the semiconductor industry that feel like AMD is going to be doing a lot better and has a lot more growth potential heading forward. So I think that's interesting. And if that narrative catches on with the overall market, then I think a catch-up trade is certainly in order, and possibly AMD performs NVIDIA in the weeks and months ahead. We'll have to see if that comes to fruition. But for now, from a purely technical standpoint, from just looking at the charts, this felt like a false move lower right here, and we got a really good bounce right at 150. And it feels like, I'm not trying to really crowd this chart up with too many lines, but I just want to give you a, like how I'm thinking about this. It feels like it's broken out of whatever this downtrend was right here, and is moving higher, and is at least moving into a higher consolidation zone from here at the worst. At the best, this is a new sharp uptrend that could take AMD back to its highs. So I'm very pleased with how that trade is shaping up so far. I will absolutely take a rest day from AMD here if that means we have the opportunity to maybe front run some expectations about NVIDIA. I don't know how tomorrow is going to shake out overall with the markets or with the semiconductors specifically, but I can tell you that I think there's a possibility that we get some buying leading into NVIDIA's earnings, because why not? I mean, the market's hot right now. Expectations are high. Why not have some people kind of buy and have one of those pre-earnings bumps and float the entire sector higher? I think that's entirely possible. So I'm kind of hoping that we see something like that, especially after what's shaping up to be like a really nice little consolidation day. We opened up in the red on the NASDAQ, and you can see here we got some of the Magnificent Seven names turning green right here. Some of the semiconductors are starting to shape up. NVIDIA is already turning green after being red earlier this morning. So the buyers are there. And I mean, look at how good that looks. This thing is just creeping back up to this nice clean level right here near 950. It just feels like it's just raring to go, and it's just ready to rip higher right here. Again, I don't know what earnings are going to have in store for us, but if there were no earnings tomorrow, this would be the type of chart that you'd want to buy as soon as it really pushes higher toward the close today, because it would be closing at, let's see, almost 2-month highs right there out of this nice consolidation. It just feels like it wants higher. It feels like everybody's getting back into this trade right here. So the theme so far from the stuff we've talked about is the meme stuff, all that late cycle meme nonsense, dead in the water after a week. Everybody's coming back to the big market leaders, and the averages are pushing new highs. What more could you ask for? I'd much rather be trading names like this than something like GameStop. Call me crazy. I just feel like that's the better play in these market conditions. All right. So what else do we have here? See, this is where Matt would come in, and he would have something really intelligent to say to fill the void. But I'm just going to keep talking as I look at my notes here and figure out what we need to look at next. Right, crypto. There's so much going on in the markets, and you know there's a lot going on when crypto is like the third or fourth thing that I'm getting into, and it's close to 11:30. So things are getting pretty nuts. Bitcoin. Last night, come on, Bitcoin, pop up for me. There we go. Last night, Bitcoin started blasting higher. It had been kind of a frustrating few weeks with Bitcoin right there. I attempted to trade some Bitcoin miners and got shaken out of those trades. This false breakout right here is what I thought would trigger the big upside move. If you remember all the hype leading into the ETF approvals, and then I believe that happened right around here. Oh, that happened back here, and then the halving happened right around here at this swing high, probably near 67, 66K. And then as soon as the news hits, you kind of get this fade. It's breaking here to prices we hadn't seen since February. This scared out some people, and then immediately you get a launch higher. Right in here, I thought, well, we're going to go back up to the top of this range. Well, we have. It's just taken its sweet time doing it in true crypto fashion. Had to shake us out again by fading back down toward the bottom of this range. But it's consistently found buyers here in the low 60s. And then we had a nice move on Wednesday of last week, nice consolidation. And then it felt like out of nowhere yesterday, we were just sort of hanging out in the high 60s, and then pow, straight up into the 70, 71K range, and then consolidating nicely today. The real catalyst here came from Ethereum. There was chatter about expectations of the Ethereum ETFs getting SEC approval, and that helped shoot Ethereum higher right here, 20% higher yesterday. And as you can see, with going back to Bitcoin, don't get me wrong, this is very constructive consolidation here near the top of its range. You know, I wouldn't expect it necessarily to be jetting higher right back up to 73K and those all-time highs and teasing that just yet. I think it's good that it's resting here. However, you can see just how strong this Ethereum move is by how strong the follow-up is. Even after a day when it was up almost 20%, it's up another 3-4% today and topping those swing highs from April and starting to get pretty darn close to 4,000, which is where it was teasing back in mid-March before it rolled over. In weeks past, I know we've discussed the idea of Ethereum as a catch-up trade, and I think this is still relevant because if we flip this to a weekly chart, we can see that all the way back up here in late 2021, Ethereum peaked around, what are we going to say that is? Let's say 4,600. We got a ways to go before it gets back to those all-time highs. If we look at that same chart with Bitcoin, Bitcoin has already surpassed its November 2021 all-time highs, and it's set new all-time highs. It did that as recently as early March. Ethereum's been lagging. It was lagging most of the year. It was lagging back here in 2023 when Bitcoin was pushing higher. So the potential was there for this thing to really get going, and that's what it's done. I'm impressed by this move. I think this could really trigger another major leg higher. I think everybody, from a narrative perspective, everybody's been talking seriously about Bitcoin 100K since probably this breakout right here. I know that there's been a lot of very smart folks that are more involved in crypto than me, who have been talking about these what have seemed like outlandish price targets for quite some time. But I think it's one of those things where you have to see it to believe it. And when you see a run off of those January lows near 40,000 all the way up to 74. Once you're in the 70s there, I think that's when the chatter started hitting extreme levels. It was even on the financial TV. They had folks on there seriously discussing Bitcoin hitting 100,000. So this target, and obviously it's a big psychological round number that's in people's brains now. That's the earworm. And with this big, huge consolidation that's essentially been going on since late February right here, it wouldn't surprise me if when this thing starts launching, and it might not do it right away. In fairness, we might have to go up to this 73,000 mark and, play one of these games just in reverse, like you've seen down here from early May, where you get a breakout and then it kind of retreats back into the zone. That just seems to be how Bitcoin likes to behave. But if we do get a very clean break, like we saw back here in February, and this thing really starts marching higher, I think it's entirely possible that we see 100K in short order. And obviously, I think the hype is going to be at fever pitch by then. But if that does start to materialize, I think there's ways we can play it in the stock market, not just within crypto. I think that it's possible that the fears of Bitcoin miner performance post-halving are overblown. And the reason I say that is because we haven't really seen a ton of downside action in the crypto miners since the halving has happened. You would think that, folks would be exiting those trades in droves. There really aren't. If we look at CLSK, that's still well within a nice little range right here. I don't know what this line was from. We were probably discussing maybe targets where it could bounce, but this is in a nice choppy range. Yeah, it's not the cleanest chart in the world, but at the same time, it's not broken down. It's not below 13. I don't think it's anything to really worry about. Are these names going to really start exploding higher on the backs of a Bitcoin move to 100,000 on an Ethereum catch-up trade that takes it to new highs? So we have CLSK, we have good old Mara. Mara also, you can see, similar, but not exactly the same as far as the chart is concerned. But you can see it's been steadily trying to push higher now since those April lows right there. It's got a ways to go before it can attack those highs. But if we do see Bitcoin start to get to the top of the range, are these crypto miners going to start moving higher and doing the same thing? I mean, they got a ways to go. If we imagine the Bitcoin chart compared to this, if Bitcoin is at its halfway point of this wide consolidation and it's moving higher, towards 73K, does that mean Mara could catch up and post 32, 33, and then break out from there? I think it's possible. Either way, it's going to give us important information. I think if the miners fail to play nice during a major crypto rally right there, then maybe there is some more downside traction that's going to happen just due to the fact that maybe the stuff that they're saying about the miners is true post-halving. I'm not really sure, but I'm going to follow price and let that tell me what the deal is with these trades. Because again, I like trading these stocks because they move very quickly. They're very conducive to a quick options play, to a quick swing trade, if you can get a really good entry. Now that these are snapping back, maybe we get some of this mess out of these charts right here. Some of these big ugly days where it was down 12% on the 10th, a couple Fridays ago right here, and it really starts to ramp up and push higher. I'm very interested to see how these things develop moving forward, especially if we continue to see the strength like we're seeing here with the Ethereum catch up with Bitcoin. And again, Bitcoin's holding above 70K. It hasn't spent a lot of time north of 70K. This is it. You're looking at it right here. Just these tags of that area from back in March and April, and then of course this huge momentum push back in January that lasted all the way until mid-March, where it pushed all the way to those all-time highs above 73K. So a lot of fun stuff to watch in crypto right here. And again, going back to the stuff that we talked about last week, I'd much rather trade this stuff than the GameStop rumor mill. I just feel like it's a lot easier. And I mean, even with the givebacks that crypto has and some of the rockier action, I think it still lands a lot better than some of the meme stock trades. And it's a little bit less erratic, believe it or not. Let's see here. check my notes. Again, we're missing Matt. Matt would have some good filler for you right here as I'm going through my notes to make sure we're hitting all the important stuff right here. Metals. There has been some incredible action in precious and base metals lately. Gold, we all know about that. Pretty incredible. It just keeps on marching higher. It feels like we're logging new highs every single day now. I mean, yeah, it has pulled back a little bit here and there, but for the most part, it's just ramping. And 2,500 feels like it's it's only a matter of time. I mean, maybe in a week, maybe 2 weeks, we'll be up here at 2,500. We'll have to see how it all develops. But this is shaping up to be a really nice looking trend way back in the Stone Age, back in 2023. We were talking about interesting price targets for gold, and on the big paradigm call, I said that my price target for the end of the first half, so the end of June, early July, price target for gold was 2,600. I think we could get there. I know that was aggressive at the time, but you have to remember we were coming right off of the first monthly close ever above 2,000. It felt like it was only a matter of time before we consolidated and broke out. I thought it would have happened a lot earlier, but you can see here how many times it attempted to extend significantly, materially above 2K, and then we finally got the big breakout right here, beautifully on the 1st of March, right there. Speaking of which, this market really likes to operate by the calendar, if you didn't notice. We had April being our correction month. It really wasn't a correction. It was more of a pullback if we really want to, get into semantics. And then on May 1st, the machines turn on and everybody starts buying again. The same thing happened with gold. The calendar flips to March, and I don't know, did somebody just go in and press a button? Somebody woke up with gold on the brain and pushed the buy button and just turned it on and let it fly. It certainly feels like it. But I mean, a gorgeous chart. There's not much more you could ask for if you're a gold bug, a precious metals bull. And it's something we've been waiting for a long time. I think COVID kind of disrupted the start of a new commodities bull cycle, but we're getting back into that now, and these things are really starting to fly. Silver, finally. And this is more confirmation that we're on the right track here, and this isn't just going to be a short-lived thing, because silver is starting to outperform finally. One of my gripes with gold back in December and January was that all the gold miners still sucked and silver wasn't really playing nice. Now that's completely false. Silver is playing more than nice. It's squeezing. Had a huge day where it was up almost 7% on Friday. What a massive breakout we saw heading into the weekend for silver, and it hasn't even looked back. Yeah, it's moved a little bit lower intraday, but it's pushed higher. This buying pressure is very real right now. And I mean, these are prices we haven't seen, and I'm gonna have to reset my chart because there's no way I can zoom back that far on a daily. I'll put it on a monthly, because you have to realize that these are prices we haven't seen since it was coming down from the last commodity super cycle. This is 2011 right here, where silver went parabolic from the depths of the financial crisis. It went parabolic from $9 all the way to 50. And then it went down the other side of the mountain right there in the years to come. So we haven't seen these prices since December of 2012. That's pretty incredible. It's been a hot minute since silver has been up here at these levels. And it feels like, and again, this is a monthly candle, so it's up 22% so far in May, building on the backs of those nice moves back toward, you can see where this line is that I had on the daily chart, back toward this breakout area near 26 that it just couldn't ever seem to get over and hold over, even back when gold was ripping higher to 2,000 back in the summer of 2020, back in the COVID lockdown era. Never could really hold above that mark, and faded back into oblivion here, back below $20. But man, is it doing it now, and really pushing higher right here. These stocks look great too. The miners are starting to wake up. I mean, they've admittedly been a little bit sloppy, but they're really starting to firm up, and the speculative money is flowing back into these gold miner stocks. This is GDX. This is the VanEck gold miners ETF. And you can see this nice run here from kind of a sloppy consolidation. I mean, you can see the reversal here back in the middle of April when, and I think this was a case of just everything getting kind of torn down as the market reset a little bit, because this is right where semiconductors were starting to roll over a little bit. Tech was getting hit, growth was getting pummeled. It was just, the market was very corrective in those couple of weeks, and it didn't let gold slip through the cracks either. It pushed it down lower, and the miners the same. But it's caught itself right here at this 32 area and pivoted nicely. And that's going back all the way to 2023. So I like these areas, these polarity areas where you have an area that acted as a pretty strong resistance area, and that was this 32, 33 area turning into support, and then it pushing higher and extending off of there. Very bullish. What's not to love? The miners look great. I'm excited about these charts. I'm excited about both miners, crypto miners, potentially, if they can really get going, and gold, silver miners, copper. We have an FCX trade on right now at the trading desk, and you can see pretty darn clean breakout. Yeah, it can get a little wonky. This is one of those stocks where you can have these days like this where it's like, oops, down 3%. But it roared back higher the next day, and is consolidating pretty nicely for FCX there along the top of its range. I think it might have some more room to go because this copper squeeze has been pretty incredible. If we go here and we pull up a copper chart, gold and silver were resetting a little bit today. I mean, not copper. Look at this thing. I mean, what an incredible run. We talked about down in here in April when it was still below 450. I believe I was telling Matt, like, this thing's going to go to $5, and it feels like it's going to go there in a hurry, and it certainly did. Need a little bit of rest here in the 460s and let those moving averages catch up. But I mean, man, this thing has shot higher, and it just doesn't want to slow down. Really incredible move. And again, like going back to these longer term charts, you can see how important these breakouts are. This is a monthly look right here. This is the financial crisis going back to 2009. We're getting back above those highs right there. Commodities, fast and furious action, big directional action from these. And when they go hard. And I think that's exactly what we're seeing here. Finally with copper. There was a little preview of that during COVID right here. This was the COVID lows back in early 2020, and the nice push into the summer with the rest of the metals. And now it's bled that off, and we're pushing higher nicely, new highs. What's not to love? Looks pretty incredible to me. Again, miners across the board looks like a great trade to be in heading into the summer. A lot of strength there. No complaints. Kind of going along with that same theme. And I had a trade that didn't go so well for us in the trading desk in uranium, but it was more of a timing issue than anything because uranium looks incredibly strong right here. You can see this breakout right here. This was Friday. Nice big move higher Friday. All the metals and resources and all kinds of stuff were popping on Friday afternoon. And I'll extend this line a little bit right here to give you the full effect right here. But look at the volume coming in. This is URA. This is the uranium, the global uranium ETF right here. That's a powerful breakout. When you got those big green bars right there, that's a lot of volume coming in to this trade right here. And you can see, like going back, just how strong of a trend this is right here. If Matt was on the call, I would quiz him to see if he had seen that headline. I think it's that there's a new Dutch government that got elected, and they're scrapping some of those nonsense climate rules that a lot of the European countries have, and they're actually authorizing building new nuclear plants. Go figure. Common sense stuff. But it's happening. I think there's some sort of backlash happening, that to the anti-nuclear regime that's been around for so long, and uranium is certainly reaping the benefits of that. There's nothing bad to say about a chart like this, other than the fact that it can be a little volatile. But that's a picture-perfect breakout right there. CCJ. This is the trade that we ran out of time with. And on these swing trades, you could sometimes just run out of time if it moves against you hard for a couple days, which is what it did here in early May. But you can see on Friday the big push higher, and then it just is extending. Like, we're not seeing a lot of consolidation after a big move like that. Folks are chasing, and that just leads to an even stronger breakout. So I'm guessing that we're going to consolidate at higher prices right here. But I really like the looks of these charts. So, I mean, just to review real quick: crypto miners, gold, silver miners, copper miners, uranium stocks. I mean, all of these charts, they look absolutely fantastic. And a week ago, we were talking about meme stocks. We were talking about the market kind of, moving along. Nothing insane was happening. Nothing scary. There was no one sounding the alarm that like we were going to roll over or anything like that. But we were just sort of watching and waiting, and all that watching and waiting has certainly paid off with some pretty powerful breakouts late last week, and then some really nice follow through early this week. And I mean, what's not to love about a chart like this? Looks really good. Let's see, what else do I have here? China. I wrote a little bit about China today because I rarely write about China. It feels like anytime China is in the news, it's for something negative. And there's probably a reason for that. It's because Chinese markets have been in the doghouse for years and they've just looked terrible. World markets are just scorching toward new highs right now, except China. China is gaining momentum and it's starting to outperform now, but it's nowhere near its highs. Here's FXI. This is the iShares China Large Cap ETF, something we've been talking about here and there for a few months now, really. We talked about how Nuckman had some nice looking China trades when it first started really bouncing here and catching his eye. And it keeps on going. It keeps extending. Yes, it's down today. There's lots of these names that are kind of resetting today. But if we go back far enough looking at this, you have to realize what position a lot of these stocks are in. If you look at the Hang Seng, you look at the Shanghai, they're all very similar looks in. There was a nice post-COVID run right here. And then this is where things started going poorly for Chinese stocks, where the Chinese government was, in lockdown mode more so than the rest of the world. There was plenty of negative news coming out of China. It felt like on a monthly basis. And FXI topped out here around $50 and never even came close to regaining that. And really, like, by the middle of 2021, while US stocks were still pretty resilient, yeah, a lot of growth stuff had fallen off. But at the same time, stocks were pretty resilient until early 2022 when the bear market really kicked in. China started theirs early and also never really recovered. Way down here, and let's see if this chart goes all the way back. I might have to pull up the Hang Seng for you. Hold on a second. Let's see if we can pull it up on here and see how far this fund goes if we do monthlies. Okay, so it does go back far enough. This is a monthly chart of FXI. This is the financial crisis lows. This is 2009 right here. Everybody was assuming we were going to retest those lows right here in Chinese shares as recently as October of 2022, when US stocks really started bottoming out. I mean, this was a nightmare. Not only was it a nightmare for Chinese stocks right there, which were plunging toward multi-decade lows right there, even after they've rallied along with the rest of the world, like heading into 2023, when things really started to firm up for US stocks, they couldn't follow through and hit resistance and moved lower again and fell right back down into the bottom of those ranges right there. They look terrible. They did not participate at all in the 2023 bull market like we saw in American equities right there and across lots of places across the globe. They were rolling over once again, and again, this is a monthly chart. It wasn't until February when these stocks started picking up steam. I think we could be very early in in the cycle here. I think this could be the beginning of a major change in trend. It might not be, but it feels like the table is set for something big to happen. And now we have all of these very smart fund managers coming out. 13F season, you see what they're buying. There's guys scooping up Alibaba. There's people scooping up other Chinese shares. There are a lot of people going in and placing very strategic bets on China moving much higher from here. And I think that's interesting because I don't think the news cycle has really changed yet. I think it's still overwhelmingly negative in China. I think people still talk about like how many people are short Chinese stocks. I don't have all those numbers in front of me right now, but it just feels to me that the narrative really hasn't changed yet because we're still in a disbelief phase of this rally. And that's what happens in the markets. When you have bounces off these lows right here, and any potential change in trend, no one's going to believe that first bounce because all these other bounces have failed in the past. Okay, so maybe this is a break of a downtrend, maybe it's not. It's been violent so far. It's been a heck of a snapback. I mean, we went back, if we go back to the monthly chart right here, you can see that, what are we up so far this month? Yeah, 12%. NASDAQ's not up 12% this month. China large caps are. So that's interesting. But you have these disbelief rallies here where price is changing rapidly. It's bouncing off of a low and no one believes it yet. And then after those disbelief rallies, you usually will get some sort of a pullback and everybody will say, ah, that's the told you so right there. That's the, I knew this thing wasn't going to last. I knew we were going to go back down or whatever. We really haven't seen that yet, but we will eventually, obviously. And then after that, you get the buy-in where it starts bouncing again and people realize that, oh, okay, something's different here. And this is really starting to move. Once you get the buy-in and people are starting to notice that, hey, China's been outperforming every other group across the world for the past 6 months, maybe, let's say that. Once you get that buy-in, then the narrative starts to switch because all the people that are late to the idea start asking, I wonder why people are buying Chinese stocks. And they start to find bullish reasons about why they're picking it up. And that starts to become the new narrative. And then things really get going. We're not there yet. I think we're still in that bearish news phase, but price is telling us a different story. And that's why we need to really start paying attention here because I think these could be really good trades moving forward. I like this China Internet ETF, KWEB. Right here, you can see how I can draw a quick line for you on this bad boy right here. You can see how we're getting a nice like throwback to this, whatever this area is right here. It's 31. And again, it's not rocket science. It's just a line. But I like little throwbacks like that. If you get a bounce off of this, I'm not buying the dip. Wait for the bounce and see what happens. See how it materializes after these little dips right here. If this bounces somewhere in this area, it doesn't have to be exactly on this red line. But if it bounces here somewhere in this area, that's a good spot to jump in on a long trade and say, okay, is this thing going to go again? I know where I'm going to be wrong. I'm right here at the bottom of this little range right here, right at this area where these swing highs are from back in early 2023, mid 2023. Is this go time or is this going to fall way back into its range? So very interesting spot right here. Keeping my eye open on some of these. I have some individual Chinese names right here. I mentioned Alibaba. That's the one. Either Druckenmiller or Tepper is buying. It's escaping me right now. But you can see here, is this a potential bottom forming in this stock right here? Hasn't looked good for a while. I mean, Alibaba was what? Over 300 back in October of 2020. When it peaked out during the COVID era, and it's under $100 and has been for a while and hasn't been able to get off the map. Is this it? Did not have a negative reaction to earnings right there. Quite the opposite. Is this going to be an area where it can bounce and move higher? Are we still really early on a change in trend right here? I think we could be onto something with potential trades like this. I like these moving forward. Some look better than others. And, I'm looking at the US listed ones, obviously. This is a different one here. This is JD. It looks okay. It's kind of a similar idea to Baba. Again, very early. big potential change in trend possibility. But on the other hand, could very well fail here and move lower. But those type of calculated risks, I think are super interesting, especially when we're in a situation here where the news is just so overwhelmingly negative and price is kind of whispering a different story to us. So I really like that. All right. That's what I have for you for right now. I'm getting some questions tossed my way. Better late than never, you guys. So I'm going to try to dig into some of those before I say goodbye to you today. Let's see, Intel. For Intel, obviously, nobody liked earnings back in late April, and it really hasn't made an honest effort to fill that gap. I'm struggling to find something nice to say about it. I'm not trying to be polite. It's just this chart's kind of a mess. If it's going to bounce, it's got to be here, right? Because it gapped down here at the bottom of this range, and it seems to have been able to catch every time in the low 30s. So I guess if you're bullish on Intel, this isn't a bad spot on like a significant bounce here to try to pick up shares, and just know that they might move against you, and this thing just might be stuck in a perpetual bear market. It just kind of stinks that you see a stock like this, and it's just not performing, along with other semiconductors. And so I'm very wary of it when, if I'm using my weighing machine properly, I'm saying, well, wouldn't I rather be buying like a semiconductor that's in a really strong uptrend than Intel, which is just turning into a serial laggard in that universe. So, I mean, those are just my very surface level thoughts on where I think it could be headed. I'd much rather buy an outperformer than one that I hope is going to potentially bounce and hasn't really showed me that it wants to just yet. We have a question about SLV. Why aren't they really following the moves of underlying precious metals? It probably is just how these trusts are set up. I'm not entirely sure. I don't think they're bad trades necessarily. But I feel like for the purposes of like a swing trade, like a quick momentum trade, I'd rather be in like a miner, because I feel like the miners, especially in this environment, they can really start percolating and they can really start popping and giving us those big double-digit moves. Whereas, SLV and GLD are more designed to, follow the metals, the magnitude of the moves in metals. So they'll be a little bit more muted. And that's just from like a swing trading perspective, is what I'm speaking to there. But I don't think these are necessarily terrible directional proxies for gold or silver. Exactly. You can buy them without having to get involved in the futures market, which is nice. There are physical ETFs as well. I know Sprott has a bunch. I can't really come up with the tickers off the top of my head, but Sprott has a bunch of funds where they physically hold the metal, which is I think a lot different than like a Spider Gold Trust operates. So that's the best info I can really give you on that. For trading purposes, there's lots of individual miners that are interesting. There's GDXJ, which is the smaller junior miners. And theoretically, if we are in a rip-roaring bull market for precious metals, then the juniors are going to outperform the big boys, and all is good in the speculative world of the mining stocks. And you can kind of play these ETFs to, just mitigate any type of individual stock risk with like earnings or whatever have you, or negative news that could fall and crush whatever individual miner you're looking at. And there's also some leveraged ETFs. There's, what is it, Nugget, NUGT? This is the 2X gold miners ETF trading vehicle, not for buy and hold, obviously. And then there's Dust, which is its opposite. That's the bear one. And you can probably see that by the fact that the chart is going down and to the right. But yeah, those are like the general trading vehicles. I don't really mess with Nugget and Dust. I'd rather just, play options on something like, if I could spell, something like GDX, which I feel is the better move. And I mean, again, you can see a really pretty chart. right there. I could update these lines a little bit, and we could start talking about how, like, yeah, like this was the solid breakout above those 2023 swing highs right there, and now we're kind of getting up into the stratosphere and consolidating a little bit. Could go farther. But yeah, I like all the precious metal stuff right now. I feel like those are going to be good trades headed into the summer months right there. So there you have it, you guys. I think that'll do it for us today. Thanks a lot for bearing with me with Matt not being here. I did my best to catch you up on everything that's happening in the market. Again, I think these are exciting times. There's a lot popping off in stocks. You don't have to buy the game stocks and the AMCs and that sort of thing to play these big directional moves. The main thing to be looking for this week, those NVIDIA earnings, man. What are we going to get from big bad NVIDIA on Wednesday night? Is that going to dictate how tech stocks and the rest of the market trade heading into the weekend? I don't know. We'll see, but I think these charts are setting up and looking to push higher. We'll see if earnings interrupts that, but they look like they want to push higher right here. Just one last quick check on the markets. Copper is still up because it never goes down ever again. Nice consolidation day. Again, still feels really bullish out there. It's nice to see some of these stocks take a breather. Everything feels like it's shaping up for us to push higher into June. Maybe we get into June and we see the market rest a little bit heading into the summer months. But for right now, it's time to put the foot on the gas and look for those long plays and to play those breakouts. The market is rewarding folks that are doing so. And so from a swing trading perspective, that's what I'm going to be doing over the next several days unless something changes. It feels like it's go time right now, and we'll play this until it runs out of a little bit of steam, and then we'll reassess from there. All right. Hope you guys enjoyed today's session. I had a good time. And